Good morning, ladies and gentlemen. This is Butch Shellrock, Options University, Monday, August 20th, 2012. Welcome to Market Forecast. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We are not a service that tells you what to trade. We are not implying or guaranteeing any profit. And as always, do not trade with money that you cannot afford to lose. And as we looked at the last week, we saw that as we looked at it on Thursday or Friday morning, we had a whole lot of things that took place during the last week as far as announcements. And so as we looked at the beginning of them, we saw that we had not much on Monday, and then as we went into Tuesday, we had PPI, retail sales, things were coming in good, CPI, housing industry, industrial production, all were looking good. On Thursday, we had our normal jobless claims. All in all, economically, it was a pretty good week coming into Friday. Philly Fed survey was fine. And as we came into Friday, in review, we saw that the consumer sentiment from the University of Michigan survey for August came in better than expected. And when we looked at the leading indicators for the month of July, we saw that that also came in better than expected. Let's take a look and see what we expected for next week. And we'll take a look at next week, and we'll see that on Monday we have very little going on. On Tuesday we have very little going on. On Wednesday, we have very little going on. FOMC meeting minutes at 2 o'clock, which certainly have not moved the market in any, unless there's some big news that's going to come out from the FOMC meeting minutes, which we certainly aren't going to expect. Jobless claims as every Thursday morning, so that certainly will be there. And we see that we have new home sales, which have been actually pretty promising as of recently, and durable goods on Friday. So not a big week as far as economic announcements during the coming week. Let's next take a look at the SPX and see exactly what the SPX did during the last week. And we see that as we look at the SPX, we had a fairly decent week. And we look at the last 5 days, we see that the cycle was up, as it has been for the last couple of weeks. And although it wasn't a huge gain for the week, it still was the fifth winning week in a row and the ninth winning week in the last 11. So if this is what the summer doldrums look like, the bulls would love to see this each and every year. As it stands now, when we look at this, we see that we had our low in June, and from that point we're up almost 11% in this uptrend that we've had since that time. We had higher highs, higher lows, and the higher lows we have demarcated by this line. And we see that the air should be getting a little thin up here as we're sitting at that level of around 1417, 1418. Is it time for a pullback? Are we overbought? Well, it would seem that we've been that way for a while after 11 up days in a row. But we see also that we've got another area up here with our previous high right around 1431. And so are we going that high without a pullback? Well, we'll have to see what happens this week as we pull forward. Not much news coming in this week as we look at economic indicators. So what we may see is we may see some confusion coming in out of the Euro contagion, or out of Asia, or out of the economic news coming from across the ocean. Euro news could also have an effect on the market. Let's take a little closer look at what happened during the last week. And as we look at that last week, looking at those 5 days, we see that we had a big day on Thursday, up almost 0.7%. And so we saw Friday come up. Friday also continued with higher highs, higher lows, but notice could look like a topping pattern. But in order to realize that it is a topping pattern, we need to begin to see lower highs and lower lows, and basically all we're seeing is a very nice little upcycle that's been going on for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days in a row. So we are in an uptrend in an 11-day upcycle, and that's a lot of days without a pullback. If we pull back, where are we going to pull back to? Well, our first target, of course, will be this area around 1380, which is part of where the SPX may return to that 30-day moving average. Let's see what the Dow did in reference to the SPX, and we take a look at the Dow and we see that it didn't have the same type of formation, but we saw that it certainly went sideways for quite some time, and now it's headed up towards that next level of resistance. So nearing resistance on the Dow. Again, another pullback could be appropriate to the 30-day moving average, but so far the trend is your friend until it ends, and it has not ended yet. Look for lower highs and lower lows. The air should be getting a little thin up here. Looking at the NASDAQ, we saw also for the last 11 days a bit of a sideways pattern and then a breakout this week. Much bigger breakout out of the NASDAQ in the last 3 days than out of the other indices that we've looked at so far. Now let's look at the index that's not quite as strong as the others. We're going to take a look at the Russell, and we see that it certainly had a nice move, but notice it still is trading in the same trading range that it's been at for a while, sitting at resistance. So many times what we see is we see the Russell giving us an indication of when there's going to be a pullback or a breakout. So if you see the Russell break out on Monday or Tuesday of this week, you can expect the overall market's probably going to follow in the same direction. If you see the NASDAQ start to pull back with a little vigor, could be a precursor of what's happening for the S&P, Dow, and NASDAQ. So watch the Russell many times as a leading indicator. Looking at the week, we see that all of the indexes, the Dow, the NASDAQ, the S&P 500, the Russell 2000, we see that they were all up for the week, different amounts. NASDAQ up 2% for the week, S&P up almost 1% for the week, and look at the Russell up 2.3% for the week, as it had a big week, but it's still only trading within its normal trading range. We don't have a breakout out of the Russell yet. As we look for the year, we see that we're in double digits in everything except for the Dow, which is only up 8.7%. NASDAQ being up 18%, and S&P up 12.8% as we're reaching those levels that we saw in the first quarter. And if we go to 1431, that's exactly where we're going to end up. All right, next let's take a look at some of the other indicators that we use. Look at this VIX, which has been really trending lower over the past month. And we look at the month, we see the trend is down. Very low VIX, which certainly affects our option premiums, and we're sitting down this at this 1345 level. Now the VIX is low, it means it's time to go, but not until we see some kind of reversal on it. So just be a little bit leery in that we are a bit overextended and we're kind of at some real low levels for the VIX. So we might see pullback in the overall market, which would be healthy at this point after 11 days up. Next, let's take a look at some of the ETFs, which give us an idea of what some of the other in areas and sectors are doing. Looking at the bonds, we'll look at the TLT, which is an ETF for a 20-year Treasury bond. And we see that it finally broke out of that trading range that it had been in and is now headed toward that 200-day moving average. Gave us a big old doji on Friday. I'm sorry, it gave us an inside day on Friday. So we'll see what this has to hold for us as the future. Is it going to go down to that 200-day moving average, or are we going to see a reversal getting higher highs and higher lows as the market pulls back? Watch for it. It'll be one of those great indicators you can use to tell which way the market is going. Looking at the financials, we always, of course, if we're going to have a breakout, expect the financials are going to participate if it has any meanings. And sure enough, you see we broke out of our trading range, and during the last week, had a breakout on the financials, which fits with what our expectations are of the market. Taking a look at oil, we see that oil also has broken out and has had a good number of days in this upcycle, breaking out of its previous trading range. We looked at the USO to give us some indication of what's going on in oil, and we'll look at GLD to give us an indication of the ETF for gold. And we see no breakout for gold, just plain trading within its range. Although it is getting higher lows, higher lows, higher lows, but we'll see whether it actually breaks out looking at this ETF for gold. All right, and with that, let's now take a look at the spider. We'll see what kind of volume we're talking about for the last 10, 11 days. And if we look at this whole section here, with the bounce off of the moving average and heading up in a nice little up cycle, we see that it has not really been supported by volume. The volume has been low, 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 low for the last 10, 11 days. So we're seeing this move up, but we're not seeing any real conviction to it as it's taking place with low volume. So we'll see if we do have a pullback. Like I said, the air should be getting thin up here. Watch for lower highs, lower lows, and you might be able to take advantage on a bit of a pullback. Could be 3 to 5 days. Remember, we always pull back with more vigor than we go up. And so for those of you that are gold members, we will continue on and look at our list of stocks to watch, see what they did during this expiration week here in August, which is supposed to be the summer doldrums. And for those of you that are gold members, hang in there. For those of you that are not, if you'd like to see other free videos from Options University, please watch a little video at the end of this, and it'll give you a website where you can see other free videos. With that thought in mind, this is Butch Chorak, Options University. It's Monday, August 20th, 2012, and we have now entered the next month of expiration, and we're looking at September. September will give us that triple witching day on the third Friday of September. So with that thought, thank you for being here. Butch Chorak, Options University, Monday, August 20th, 2012.